All right, good afternoon, everyone. Today is Monday, January 7th, 2013. This is our first Monday of 2013. Before I go any further, let me give you the results. Crude oil, oops, I was trying to drag my DOM over. Crude oil, we're plus 6 ticks. On gold, we're plus 2 ticks. On the NQ, we're plus 9 ticks. On soybeans. Soybeans is the last one here. Let me get my DOM over here. There we go. On soybeans, we're plus 8 ticks. All right. It didn't start out that pretty today, but that's how it ended up. Let's see. So where does that put us so far? Plus $850 in the 4 trading days this year. $850 per contract. Let's see, if you have not taken a free trial with us, go to www.cfrn.net/apply, sign up for the free trial. In the free trial, all we ask for is your name and your email address. You get 5 days in our live trading room. You also get an email with a link in it that has a video that shows you how to download our charting platform, download our indicators, apply the indicators, and then you can play around with things for the whole week. In that week, it's a great opportunity for anyone who's on the free trial to ask questions, to learn how the indicators work, to learn the setup, because I honestly believe the setup is simple enough that you can learn it in that week. And you can start applying it. It's really pretty straightforward, I think. Yeah, if you haven't taken that free trial, get out there, www.cfrn.net/apply, sign up for it. All right, if you're on the free trial, well, you get to see quite a bit of trading this morning because I started the day out. I'm going to start with the left over here, like I've decided I'm going to start doing all the time, and do crude oil. Okay, I did not have many trades on crude this morning. A couple of them, I think, 3. Yeah, 3 trades on crude. That's not to say that's all there was, but it was pretty choppy right in the beginning. The first trade I took on crude was right here. We had a bullish cross. Now this is the way it sets up. Okay, you get the MA1, which is the blue and red line right here, crosses above the BBC, which is the green line. Once it does that, you look for space in between and expect price to pull back down toward the BBC. When it does pull back down toward the BBC, you expect it to touch the BBC and close in the direction of the cross, which would be up in this case. That's where you would enter with bullish divergence down here. When I say divergence, I mean the green line is moving away from the cycle, and the cycle in this case, if you're going long, you want it to be blue and heading toward overbought, okay, if not already overbought. In this particular case, though, there was so much momentum that it didn't pull all the way back down to the BBC. So in this case, you could draw a trend line and jump into the trade when you close above that trend line. Now, thanks to the slingshot down here, you have a lot of information about this trade. What you anticipate is that this green line is going to work its way up into the cycle. Whenever there's divergence, that's what you're anticipating. That green line is going to work its way up into the cycle. Ouch. Is going to work its way up into the cycle. In this particular case, I got long right here on the up close above that trend line, and I took some profit right up here. The thing kept going up. I took another trade right here on a close above that trend line. Once it gave me 4 or 5 ticks profit in the trade, I moved my stop to break even. It came back and took me out at break even. Then it got really sideways in here, and there was really nothing to do. So we waited and waited, and there was another close up above a trend line right here. Over here, we were waiting for it to give us another long opportunity, but the black line got below the green. No long trade in there, unfortunately. Sorry, guys. Over here, we had a close above the trend line. The slingshot wasn't giving us any indication for anything over here, so I just let that one go. All right. Over here, we had another opportunity off the BBC with a down close. I shorted right there on the down close, and once it had 4 or 5 ticks profit in the trade, I moved my stop to break even, and it came back and got me out at break even again. Here's another one right here. This happened. This was all during the break now, but I'll just highlight areas where there were trades. A close down below that trend line because we didn't really have the divergence down here. We did get divergence right here. Okay, so then a close below that trend line. So the areas you would have traded would have been right there and right there, and this right here is your divergence. All right, that was the crude oil. All right, we ended plus 6 ticks on the crude. Oops, we ended plus 6 ticks on the crude this morning. Let's see, the Russell. We took one trade on the Russell this morning. It ended up being a break-even trade. I'll show it to you. Here it was. We had a test of the BBC with an up close above the trend line. We had some divergence in here, but the cycle was blue. So we took the long trade when it closed up above the trend line. Once it closed up above the MA1, I moved my stop to break even, and it took me out at break even right over here. Then all the indexes got really choppy for a long period this morning. Right at the end of the morning session, right as the morning session closed, there was an opportunity to short the Russell again with the bearish divergence, a test of the BBC, and a down close right here. It also happened to close below the trend line at the same time, so you would have shorted right in there for the move down. It's happening again right now. This is the trend line. This is the test of the BBC. This is your bearish divergence. So you would look for a down close here. All right, you could short a down close right there. That was the Russell. Now gold. Gold was my problem child this morning. We did a lot of trading on gold, all right, because we started out with 2 losing trades right here. All right, I shorted right here on. Oops, the trend line's good. Gotta move the arrow out of the way. I shorted the close down below this trend line right here. Okay, right there. It came back up, stopped me out to the tick, and then went down to profit. All right. Once it went down to profit, it pulled back again, closed below the trend line. I shorted it again, and it stopped me out again. So I was minus 8 ticks here, minus 16 ticks there total. Then I had to work a little bit to get it back. All right. Over here, I took a little bit of profit. This was the close below the trend line was over here. Okay. It was right over there was the actual trade. So that was a close below the trend line. I shorted that, took a little bit of profit. I went long on the up close off the BBC, the bullish cross, tested the BBC, up close, bullish divergence right there. I went long right there, got a little more back. Then unfortunately I missed this one, and this one. I took this one over here, the close below the trend line, got a little bit of profit. Took this one, got a little bit of profit. And took this one toward the end of the morning session and got a little bit more profit. This is the one that brought me back above into the profit. It brought me into the green. So I ended plus 2 ticks on the gold after all that trading. You can see in here though that during the break, there were a bunch more opportunities in here during the break. The slingshot wasn't really with everything here because it was you see how the cycle was just rolling back and forth in the middle. But just drawing the trend lines like that. That one right there, the black line got up above, so you wouldn't have taken that. But let's see, drawing the trend lines like that. You would have shorted right in here. Over here, I believe. Drawing the trend lines. Nope, you would have had to reposition that trend line, so the spot would have been right there. Okay. That down close right there. This down close right there. Those are spots you could have shorted. It's a time when there seems to be things seem to loosen up, Frank. The question was when the euro closes at 11:30, it seems like it's a good time to trade. The U.S. market seems to loosen up quite a bit when the euro closes. Meaning there seems to be in that half an hour there seems to be some pretty good movement. All right. All right, so that was gold. I did crude, Russell, gold. Now we're on to this monitor. On gold we ended up plus 2 ticks. On this monitor, on the soybeans, I took 2 trades on the soybeans this morning. Yep, I'm getting right into them right here, Frank. Let's see. Pre-market, they were trend lines that I had drawn on here pre-market. It closed above the trend line and kept going up. I had drawn this one on here as we were waiting for the open at 10:30. Once it finally did open, it opened right over here. I shorted. It gave me about 3 or 4 ticks profit. I didn't move my stop to break even, and it stopped me out. Pulled back up here, tested the BBC and moved down. I missed that entry there, and then it just got really choppy, so I waited and waited and waited, and then finally, over here, it seemed to have some direction again and started moving. We had a close below this trend line was right there. Then it started to pull back a little bit, and it closed below that trend line over here. I got short on that. Now I was minus 8 ticks on this one, and I took 16 ticks profit on this one. So that put me at plus 8 ticks on those two trades on the soybeans. All right. Since then, it's been very choppy. Where it sits right now, I would look. We have bullish divergence. We have a bullish cross. It's testing the BBC. Well, it's almost testing the BBC. I would either look for a close above that trend line or a test of the BBC with an up close. All right, that's what I would look for on the soybeans. But we ended the soybeans plus 8 ticks this morning. Okay. The NQ, we did trade the NQ a bit this morning. Okay. So we'll get back into that too. All right. Right here, after the open, we had some good movement down. We had a bearish cross, the green line. What I want, as I go through this, I'm jumping from market to market to market. This is what, 1, 2, 3, 4, 5. This is my 5th market that I'm showing you this morning. And I traded 1, 2, 3, 4, 5. I've traded every market that I've shown you so far. What I want you to take away from this is that it's the exact same setup on every market. It's the same time frame. It's a 4-tick range chart. It's not a 4-tick chart. It's a range chart. A range chart set to 4 ticks. So it's a 4-tick range chart. Each bar is 4 ticks in height. Same set of indicators. It's the same setup. It's the same thing across every single market. All right. So I'm taking trade after trade after trade. And the morning wasn't easy to start out with because I was down on gold. I was down 16 ticks on gold. So right out of the box, I was down $160 a contract. And I believe we ended at plus $225 a contract, something like that. I think we ended. So we had a pretty good day after all. Now we were down on soybeans, we were down on gold, and it all came back. All right. Now, let's see. In here on the NQ, from the start on the NQ, we had good setups. Right here though, this one I got short right in here. We had a pullback test to the BBC and a down close with some bearish divergence. I had drawn in the trend line. I was looking for the close below the trend line. We got it right here. I got short in here. It pulled up to here and came back down to here. Once it closed below the MA1, after having a bullish cross, I moved my stop to break even. It came back and got me out of break even, and then it quickly dropped all the way through the prior swing. Given that, I took the next opportunity right here and shorted the close below the trend line. That one stopped me out. So I was minus 8 ticks on the NQ as well. Then we had bullish divergence, bullish cross, and just a trend line. Okay, we got the up close. I took some profit on that. That got me to minus 4 ticks. I missed this trade. I took this one. I think that got me to plus a couple of ticks. I missed this trade right in here. This one over here. I took this one. You can see it was a bullish cross. I drew the trend line in, waited for the close above the trend line with the divergence, took a long trade, and that, I believe, was my last trade of the morning. That got me to plus 9 ticks on the NQ. There was another one right in here. Why did I highlight that? I don't know why I highlighted that. Oh yeah, I do. Okay. Let me show you. I couldn't see it behind the thing. The up close right there was the spot. All right, and then another up close right there. We didn't have any divergence to support any trades over here. On this one right here, we had a bearish cross, pull away from the BBC, a test of the BBC with a down close, and bearish divergence. So this one right here was an easy one to jump right into and take on the down close right there. All right. You can see since then, from the break, there's been some more movement. No trades in here. No trades on the short side. Right up here, there was right here on the long side. Not much there though. A little bit. Then over here on the short side, right up in here, right there was a spot, and right here was the spot. Okay. And actually where we are right now, right here going right into this dynamic resistance at 27.12.5. You see it looks like it's pulling back toward the BBC right here for a bounce off the BBC with the bullish divergence. So I would wait for the up close off the BBC on that one. And that was the NQ. Alright, so we ended the NQ up 9 ticks. Now on the ES didn't have any follow through at all this morning. There were a few trades that set up. Each one of them gave a point, a little more than a point. Alright, there was one right here. There was another one right here. There was another one over here. Let's see, on the way down right here. Price never really pulled away from the BBC in here. But had it pulled away from the BBC, you would have been looking at... Let me blow this up so you can see it a little better. Had it pulled away from the BBC, you would have been looking at the down close right here because we didn't have any divergence to support the trade. All right. Given where it is right now, it's going. This is a weekly trading zone here at 1451. This is some bearish divergence. This is the down close below the trend line. So the shorting spot right here would have been right here at 51.75. All right. It's going right into a weekly trading zone. It'll see 51. There it is. Should see 50 probably. But there's a point from that spot right there. Okay. Now I only peeked at the YM this morning, but there was some movement on the YM. You know, doing the same exact thing over and over and over and over and over and over and over again. You guys see this, right? Just the same thing over and over. And the trades just keep setting up and setting up and setting up and setting up. And all you have to do is pick a market and trade it. I don't recommend everybody try to trade as many markets as I trade. You know, it would be really difficult for you to jump around from market to market to market to market like this. But if, like, let's say you like crude oil and you like gold and you like the NASDAQ. Now, when trades are setting up, even if I don't have the chart showing, if trades are setting up, I'll say something like, there's a trade setting up on the NQ right now. There's a trade setting up on the NQ. A down close on this bar would be an entry point, even if I don't have the NQ showing. Like right now on gold, gold is pulling back up toward the BBC. If it pulls back up and hits the BBC, you would just look for a down close. Now the assumption is that everybody that's either in the trial or is a partner has their own charts running with whatever chart they're focused on. Gold, you know, if it's gold or whatever it is, has their own chart that they're focused on, and they're looking at their chart. So when I say, you know, look for a pullback to the BBC, and if it hits the BBC and gives you a down close off the BBC, you can short it because we have bearish divergence. That's the case right now on gold. But we also have a trend line on gold. So the current bar on gold, you guys aren't even looking at gold right here, but I can tell you right now, the current bar on gold, if it has a down close, given where it is, we would short gold. Okay? Gold is currently priced at 1644.6, so the down close would be at 1644.2. So 44.2, 44.1, right there would be your entry point. All right? That is what I tell people. That's how I do it in the live trading room. And here's gold. All right? This is the current bar. This is the trend line. This is the BBC. If it pulls up and hits the BBC, you can just take a down close. If it doesn't hit the BBC and it just closes below this trend line, then, well, now the high has changed on this to 44.7, so the low is going to be 44.3. So it would be 44.3, 44.2 would be your entry. You could just short 44.3, 44.2. Okay? If it comes together that way. When I was doing this one, was it when I was doing this one? It wasn't when I was doing this one. But this is crude oil, and while I was doing the other ones, a trade came together here on crude. There's the down close on the gold, 44.3. You can short 44.3 right here. All right, it's more closed right at the trend line than below it. So if you could get a little better than 44.3, that would be good. But on this one right here on crude oil, this is the trend line, and you're looking for it to give you a down close below the trend line because you lost, you had blue on the cycle over here. So you're looking for the down close below the trend line. That would be right here. All right, right there on crude oil. While I was doing all this is where you would have shorted. All right, and that, my friends, is about it. And here's the gold trade, just starting to move. There it goes. Okay. So I had said 44.3. If you could do a little better because the close was right at the trend line, and you could have gotten 44.4, 44.5, 44.6, but 44.3 was the spot, and it dropped down to 43.8. That's $50 a contract, and it did it in just a couple of seconds. All right. What you're looking for here is for this green line to work its way down into the cycle. Okay, that's what you're looking for. The MA1 has held it in place so far, but that's it. Wouldn't you have needed to move that last trend line on the oil? Let's see. No, because it hit the BBC. This one right here hit the BBC, so you wouldn't have moved the trend line. Okay, once the price hits the BBC, you stop moving the trend line, and then you just look for the down close below it before the black gets up above the green. Okay, got it? I know that was easy to miss right in there, especially when I have my cursor on it. You can't even see it. There's a gravestone doji right there that hit the BBC. All right. There. Any other questions? Anybody? Anyone? That's it, guys. It happens again and 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 again every day, over and over again. You know, we're up now in the 4 trading days we've had so far this month. We're up $850, and that was with 2 pretty low days last week, Thursday and Friday last week. You know, I think we made $50 one on Thursday and $75 on Friday or something like that. It's the same thing, guys, every day, over and over again. All right, so if you haven't taken a free trial, get up there and www.cfrn.net/apply, sign up for the free trial. If you have taken the free trial and you want to become a partner, send us an email at support@cfrn.net and let us know, and we'll get in touch with you, and we can talk. We can talk it over. All right, walk you through the whole process. That's it. I'm going to wrap up the recap right here.